Welcome to the Jill on Money Show. This is the program that takes the mystery out of your financial life, I hope. And it's been a crazy week, and I really just needed to gather my thoughts. I've been working like crazy at CBS, and I want to talk a little bit about the election results and what I think it means for you. You know, I'm only going to be talking about the economy because that's kind of my lane. Everything else, sideline, okay? So just want to give you that as a preface. The first thing that happened at about 4 o'clock in the morning after the election is that I kind of roused myself up at around 3, maybe 4 o'clock in the morning just to check the results. I saw which way it was going. I looked at the futures markets and I was like, wow, that's a big jump. But you know, back in 2016, I remember that the futures markets plunged overnight after Trump looked like he had tied up the victory and then opened unchanged. So I was kind of ready for anything, but I did sort of get the sense that this was a real rally. And boy, was it ever. At Wednesday's closing bell, we looked up and we saw, holy smokes, the Dow had added over 1,500 points, 3.6%. The S&P 500 was up by 2.5%. The NASDAQ was up by 2.95%. And the Russell 2000 index of smaller stocks up 5.8%. There were some other things that were going on as well. Bonds got hit, so the 10-year Treasury was down in price, added 14 basis points, closed at over 4.426%. Bitcoin was up by 9.5%. All that is true, okay? But I wanted to really dive into why that happened. And I was lucky enough yesterday to be on the air with CBS Mornings to talk about just that. So let's air that segment. Here is my appearance with our anchor, Nate Burleson, on CBS Mornings, talking about the day after the election, the markets and the economy, and what's next.
All right, so what's behind the stock market jump yesterday? Let's talk about it.
Investors are looking at two aspects of a pro-growth Trump presidency. They're saying, hey, the tax rates that were cut back in the 2017 legislation, they're going to keep being as low as they are. They're going to extend those tax cuts. The second aspect is deregulation. So if you looked at the sectors yesterday that were kind of interesting, that really popped, energy, banking, crypto, all this together is what investors believe is going to be a pro-growth economy that benefits pro-growth companies.
All right, so during his campaign, he talked about the across-the-board tariffs. I mean, what does that mean, and what type of impact will that have on our pockets?
You know, what a tariff is essentially is like a fee that's slapped on an imported product, and that adds to the cost of that product. So now when you're the person who brings that product in that company, do you pass that along to the customer or not? That's the question. If you do, when we see higher prices, I think a lot of people could be surprised if we see across-the-board tariffs, we could see higher prices.
Right?
Possible. Also, what happens is we have a strengthened dollar. That's great if you're going to travel abroad. It's great if you're a domestic producer. It is not good if you're an exporter. So we'll have to wait and see what these tariffs ultimately do to the economy.
All right, the Federal Reserve, they conclude a 2-day meeting today. What's expected?
So this is pre-scheduled, nothing to do with politics. So the Fed has 8 meetings a year. It is expected that they are going to cut interest rates again by 0.25 percentage point. And really the rationale would be that the inflation rate is coming down. And I think that this is good news if you're a borrower, obviously, because you want to see interest rates come down.
A 30-year fixed rate mortgage spiked on Wednesday. Why?
Okay, so mortgage rates are actually controlled not by the Fed, but by the marketplace. And so what happens is when you look at those interest rates, we saw that bond prices, this is confusing, so just
no, that's what we have here.
Bond prices went down, yields went up, and that is what those yields are keyed to. Mortgage rates are keyed to 10-year treasuries. 10-year treasury yield went up. Why? Because what the investment community believes is that Trump policies will add to the debt and the deficit, and that is bad news for bonds. It means that bonds are less valuable and interest rates could remain higher for longer.
So the Federal Reserve Board, they raised interest rates to combat inflation. Did it work?
Well, sort of, yes.
Sort of,
wait
kind
to see. Yeah, we're on our way to a soft landing, and that is good news.
And soft landing is a good landing.
Yeah, indeed.
All right, Dollar Jill, thank you.
So we'll get to the Fed meeting in just a second, but to just dive in a little bit more on this question around bonds, I feel like I didn't do a great job describing that, but I think you guys may know more. And the reason is that you probably own bonds. bonds. And if you know that you own a bond, you would understand that a bond is essentially a loan to an entity, in this case, the U.S. government. So the idea that bond yields would jump, I think, has sort of two components to it. The first is that, if there is going to be a high growth economy, then that is actually something that would keep bond yields higher. And if it's a high growth economy that is fueled by tax cuts that are not paid for, that are borrowed in nature, then that would actually keep bond rates higher. And if there are tariffs that come down the line and that creates inflation, that too would keep yields higher. We don't know where this is all going. We know that we've had an amazing first day of trading after an election. That's all we know. We don't know the details of the policies, but I think for all of my consternation about what's going to happen with the tax rates, that there's going to have to be a deal with Congress to actually fix the individual tax rates. It is now assumed that a second Trump administration will work to extend the tax cuts of 2017 that went into effect in 2018. You probably don't remember this, but they were all supposed to sunset at the end of 2025. They may not be able to put it in stone, but they may make it temporary and push it out again. We don't know. All the shenanigans that we talk about, well, take advantage of low tax rates. I think we might just have low tax rates for the foreseeable future, for the next few years. So that will be a very interesting decision point for Congress, but also that has a real impact on your personal financial life. What is also going to have a big impact on your personal financial life is the Federal Reserve, which met later in the day after I had done this segment and did, in fact, lower interest rates by 0.25 percentage point. That was widely expected. But in the Jerome Powell press conference after the announcement of the decision of the 0.25 point rate cut, there was a very pointed question that was essentially, if the president-elect were to ask you to step down from the Fed chair position, would you? And his response was no. So how about that? Looks like Jerome Powell is staying in place. Jerome Powell's term as Fed chair is up in May of 2026. So it's quite some time from now. So a lot can happen between now and then, and there's going to be a ton of information. Are we really going to get these big tariffs? If they are going to be tariffs, are we going to see inflation again? What is the path forward for growth? It's a very different time coming into 2017 versus coming in 2025 for President-elect Trump. And the reason is that the entire economy was really, sort of humming along, but at a lower level back in 2017. Interest rates were really low and the debt was lower. And so all these things are now compounded as we enter into 2025. So all of these policies that we're talking about, keeping tax rates low, maintaining corporate tax rates that are low, putting tariffs on imported goods, these can be inflationary and deficit building and debt building in nature. So we'll see if the bond vigilantes, the people who kind of freak out about the U.S. government's indebtedness, if they're really going to push the issue in the marketplace. So that's where we are today at the end of a big week for the United States of America. Whatever side you voted for, wherever you stand, I can't emphasize enough that I don't think it makes a ton of sense to either crow about your win or sit on your pity pot and be worried about your loss. It is time for action in your own life over the things you can control. So if you were a Democrat and you're despondent about what happened, get out in your community and go do something. If you are someone who voted Republican, don't go nah, nah, nah. Get out there and make people's lives in your community better. Go down to the grassroots where you can make a difference. And I promise you, you're going to feel so good doing that, and you will have faith restored in process. I think that's really what we all need. And you'll have faith restored in institutions and maybe even faith restored in each other. So if you have a question, if you have a comment, if you're mad that I took this to a political place or not political enough, feel free to send us a note. Go to JillOnMoney.com, click the Contact Us button. Let us know what's on your mind. It's okay. We're all going to get through this. I promise. You know what they said in Annie. The sun will come out tomorrow. You can subscribe to us on the Odyssey app or wherever you find your favorite podcasts. Please leave us a rating and review wherever you listen. And it is Friday, and you know that I always like to tell you all the people who make this show possible. So our music is composed by Joel Goodman. Mark Talercio is our executive producer and king of all things web. We are distributed by Odyssey. And by the way, special thanks to all of you who make this show happen. Please do something nice for someone else today. That might be nice to yourself. Smile, get some sunshine, take a walk, be good, do some good stuff. Change your work, change your wealth, change your life. Thank you for listening, and we'll talk to you tomorrow.